Hi, everybody, and welcome to the September 2024 Economic and Market Update presented by Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. August had a tough start with an initial sell-off, but managed to end on a positive note as markets rallied. The initial sell-off came on fears about U.S. economic growth, driven by worries about central bank rate policy. But those concerns were largely taken off the table as Fed Chair Powell announced that it was time to start cutting rates, and both stock and bond markets bounced on the news. The month ended with the Dow setting a new high and the S&P 500 getting close, and with bonds showing the fourth straight month of solid performance. Interest rates were the key last month as markets bid them down after Powell's announcement. We ended the month with markets counting on at least one rate cut at the Fed's September meeting, and with more in November and December. While it's too early to rely on that because the markets could be wrong, an initial cut in September does seem locked in given the inflation and economic data. While the end results were positive, though, the August sell-off is a reminder for investors that real risks remain for markets. The expected rate cuts are based on a slowing economy, especially on the jobs front, and on the hope that inflation will keep trending down. Neither are certain, and a deterioration in the data either way could put the Fed on hold and rattle markets. Beyond the economy, political risks are expected to continue to rise as the U.S. elections get even closer. And of course, it's not just the U.S. either, as we also have expanding wars in both Ukraine and the Middle East, and the China slowdown continues. While the direct market impact from these foreign developments has been limited so far, there is a lot going on, and we do need to keep paying attention. But even with all that said, we're still in a good place here in the U.S. as we head into the fall. Markets have shown impressive resilience throughout the course of the year, and the economic backdrop is still solid. Market fundamentals are also good, with second quarter earnings growth coming in well above analyst forecasts. And while the interest rate cycle remains uncertain, Powell's announcement means the trend is very likely to have changed. So while risks certainly remain, the most likely path forward is good, with continued economic growth and more market appreciation. That's it for this month's update. Thanks for watching, and join me again next month for the latest news. Until then, be sure to check the Independent Market Observer blog for more timely updates and news. Stay safe, stay sane, and stay healthy. And have a great fall.